Welcome to Sunday, April 16th. Sunday, April 16th, 10 a.m. It's 10 o'clock in the morning, and it's time to look at this little spreadsheet that I put together just for my own viewing pleasure. But I thought, you know what? Maybe you'd like to see it as well. If you have any thoughts on earnings plays this week on stocks that are reporting. So I put together this little spreadsheet and I should be able to figure out how to attach it in the description. In fact, I owe you this spreadsheet, right? I still owe you the Dividend Champions spreadsheet where I was comparing the current dividend yield to the 5-year average, looking at the dividend yield theory. You can see here's the column I'm working on, and I've been really slow playing it because I forget. Like the nutty professor, the absent minded professor, I forget because I get so excited about every little thing that I'm researching and reading and looking through. But I will continue to prepare that for you. And then, like I said, I should be able to figure out how to attach a spreadsheet in the description. If not, I'll just ask my sweetheart because she can figure out just about anything. So here's what we have. This is stocks that have a minimum market cap of $1 billion and earnings date this week. Okay, so it's April 16th. This will go through Friday as far as the earnings dates are concerned. And then I listed implied volatility in case you want to take these types of this type of information and apply it to options trades. Of course, the higher the implied volatility, the higher the option premium that's involved because there's risk. There's more risk associated with it. So I was just looking through it myself, just a little bit to see what do I see that's interesting? I'll probably look at Comerica just for fun and games. Has a pretty high implied volatility, and so far we've seen good earnings. Now, of course, those were the big banks, the mega banks. Comerica, not a small bank though. It's got a market cap of 5.8 billion. So I'll look at that. Maybe even Bank of Ozark because I looked at Bank of Ozark before. Let's take a look over here. Oh, see, I was already I was already looking at Comerica. Bank of Ozark. Let's see here on that. Anyone? Am I spelling it wrong? What's happening here? There it is. OZK, Bank of Ozark. Of course, I liked the show Ozark, so that probably should factor into it, right? Probably not, Bart. That'll just make it more dangerous on the dance floor. And what are they saying about Bank of Ozark over there on the Seeking Alpha? They have a buy hold, a buy. So in this scenario, if you use Seeking Alpha, I like to see what some of the guys are writing about it. And then what I love also is the comments. A lot of smart comments go on at Seeking Alpha. And yes, of course, anytime there's going to be comments, there's going to be some jackwagon comments as well. But for the most part, Seeking Alpha contributors and those that comment typically have fairly thoughtful commentary. So I'll probably look at those two along with what else do we see? Tesla. I, I like Tesla. I mean, the company, of course, has got a crazy market cap based on its valuation, based on its PE ratio, but it is a tremendous growth company, the leader in EVs, led by a very charismatic and manipulative CEO. And he manipulates things to to our advantage for the most part. So I'll look at Tesla. I already have a Tesla trade on the board, right? Got a Tesla trade on the board. I think two of them. I think one's a credit spread. The other is a handful of puts. So I only have one trade on the board. It's the very conservative 157.50 puts, three of those expiring April 28th. Now, of course, those become that is dangerous during earnings season because even if they beat on earnings per share and revenue, guidance might be such that scares the investor and they begin to sell positions, bringing the price down. But I have a feeling Tesla's going to do pretty good in their earnings report. So we may consider putting another position on. There I am again with my 72 open tabs. I just love it though. So I'll be looking at the Tesla. What else is on here that we might look at? Charles Schwab, I don't know. I was thinking about that, but I think I'm going to skip it for now. Alcoa, I'll probably look at. Netflix, I'm gonna take a look at that as well, just because it's still the leader in streaming. The OG. They have the new advertising platform, working on beating down those that are sharing their passwords, which overall over time is going to be good for the shareholders. And it's typically has a pretty high volatility and a lot of volume, so you can always get in and out of your positions with Netflix. I'll be looking at that. What else we got here? What do you see? I was going to look at Steel Dynamics as well. I don't want to, I mean, you see a bunch of financials on here. I don't want to be too involved in the financials. So I think we have 1,000 shares of Bank of America, and they're coming up on earnings as well. And I have a expiring covered call position. I think it's at $32. So it should be safe to keep those shares because I'd like to just keep the Bank of America, the B and the A and the C. But you see what happened after JP Morgan and Citigroup reported their positive earnings and decent guidance. Bank of America was like, okay, high tide raises all ships. Bring that thing up there. What else do we have? So what do we have here? We have two strategies on the table. We have those $33 puts that I've been rolling, rawhide. We'll keep an eye on those. Those expire on May 19th. And then there's our 10 covered call contracts representing 1,000 shares, and those expire Friday. I think I collected $110 on that? $120 on March 30th. So it was a 3-week trade, and there's approximately $100 still left on it because of the volatility. So that should be just fine. I would not imagine Bank of America is going to push through $32 before Friday, being that it already went up 3.5%. So we will keep an eye on it, though. We will indeed. United Airlines, probably not. Probably not going to look at that. Any of these you see that you feel I should look at, please leave that in the comments below. I'll be looking at Blackstone. I'm actually got my fingers crossed maybe that tomorrow opens a red day so that I can get in on some Blackstone puts, because I don't have any open positions on Blackstone right now. I think they're going to have a fine earnings report despite their negative publicity that they've had the last couple of weeks. Nucor, I'll look at Nucor as well. What else do we have here? I should put industry on here as well, or sector, I should say. I should put maybe even both sector and industry just to help my own processing. So I'll probably look to add those on here as well. I'm going to look at Taiwan Semiconductors also. Nervous about China, bullying them in the future, which is borderline likely. But I would imagine they're going to have another great earnings report. Not as high volatility as I would have expected on Taiwan Semiconductor, but we'll take a look. We'll take a look at it now. Indeed, we will. There's our friend Bank of America. We don't have to look at that because our positions are there, unless there's some weird movement that goes on, then we might be selling some puts, but we just closed some puts last week. Bart, you should have just looked at this beforehand instead of doing it live. We'll do it live. We'll just do it together. Manpower, I'm going to look at Manpower. I'm going to look at Crown Castle. I had a play on Crown Castle before. It was a short dividend slash Wheel of Fortune strategy. It's already been called away. Bye, bye, bye. Which is fine. We made a little bit of dough on that. I'll look at CSX as well. Citigroup, of course, we have already. Why is that even on this list? Why are there 414s on here? It's probably because you didn't date it properly. Because that date's already happened, Bart, so we don't need to see them on there. That's true. Travelers, I'll look at Travelers as well. Union Pacific. So I've got my work cut out for me, it looks like. Abbott, possibly. Of course, JP Morgan reported and blew up, did real well. You know what? I'll look at Lockheed Martin also and United Health Group because I believe United Health Group, oh yeah, and Philip Morris and Procter and Gamble and Johnson & Johnson. I'm actually getting very excited to think of all the fun investigation and research I got to do. I just got to do it. Have all that going for me. But in the meantime, I've got a appointment with, oh my God, I'm telling you, super sexy hairstylist that I work with. I've got an appointment with her next to get my wig trimmed up. And, that super sexy hairstylist is also AKA my wife. So she's been cutting my hair for, it's probably going on 10 years now. Think of the money I've saved. Think of the money. But that money that I save by her providing those super sweet haircuts, I also then lose that because she pays like $200 to have her hair cut and styled every like 5. She tries to say it's every 6 weeks, but I always remind her what the math is. It's more like every 5 weeks. $200. I mean, can you even imagine? So that makes me feel good though that some of that is offset by my free haircut. So there we have it. I'm going to try to put this spreadsheet in the description for you if you're interested. If you like it, please leave me a comment, like the video, subscribe, all the good stuff. And I have another spreadsheet I'm putting together as we speak. It's for options. I'm going to be putting a selling put options spreadsheet together going into this week. So I should have that out probably by tomorrow morning, but I will be checking back with you. Enjoy the rest of Sunday, and I will see you in the next video.